Silver is probably the most undervalued asset on the planet. In fact, just a couple of weeks ago, there was a report issued that came out by the United States Geological Survey Committee. It's a branch of the U.S. government, who said by 2036, they estimate that all in-ground reserves could potentially be depleted globally. They came out and said by 2030, the majority of all the in-ground silver in Mexico could potentially be depleted. And they went as far as saying it could be the first element struck from the periodic table of elements. And so you tell me, what asset has the duality that silver does in demand of both an industrial metal, massively used in a green and digital environment? When you put military, industrial, and monetary into an asset that is depleting in nature, is coming out of the ground at 7 to 1, but priced at 84 to 1, historically 16 to 1 for 5,000 years. In every way you spin it, to me, it is the most undervalued asset on the planet, maybe the best investment. And I usually don't say gold and silver are investments, but by every single metric, supply, demand, in-ground supply, distortions in silver's relationship to gold, historically and geologically, in every way I look at it, I don't see a better place to put your money on the planet than silver. And I think many of the big investors around the globe who have been copiously accumulating it, methodically draining the exchanges, would agree. Why did the BIS reclassify gold in 2019? Why did all the central banks, the German Bundesbank, the Bank of Austria, the Dutch National Bank, the Bank of Hungary, Turkey, Poland, the Czech National Bank, why did they all repatriate their gold from the Bank of England and the New York Fed? Why have the central banks bought more gold in the last 18 months than at any time in history? Why did they buy more the first quarter this year than at any time in history? You mentioned Singapore. They are number one on the list this year, right behind Turkey, who was number one last year. Look at the amount of gold imports or exports, rather, out of Switzerland. Again, this month, number one, China, number two, India, number three, Saudi Arabia. These countries are massively accumulating gold, and not just the countries that have applied to BRICS or the members of BRICS. But yeah, I think that what gold represents is, truthfully, will be a cornerstone to whatever new system arises. I think that it's very difficult to get people to drink the Kool-Aid again after the mismanagement of the dollar as the world reserve currency. And what gold represents, not only to the BRICS, but I think to all of the central banks, is stability. The most well-funded, well-informed, and influential traders on the globe are showing us this. They are massively accumulating it. And if the price alone was indicative of the value, not only would I ask, why are the central banks buying it the way they are, but I would also ask whether you're talking about the COMEX, which is showing the lowest level, the second lowest level of silver in the history of the exchange, and gold being bled down as well, even more on a percentage basis. Look at the London Metals Exchange. Look at the Shanghai Gold Exchange. You are seeing massive deliveries of both gold and silver off of the exchanges by not only the most well-funded investors on the planet, but the most well-informed. And when you draw down supplies from COMEX and LBMA, it's more than just saying they're taking delivery. It's incredibly sophisticated. It is not an easy thing to do. And when you leave those ecosystems as a big institutional buyer or industrial buyer, you lose all industrial liquidity. It is a one-way ticket when they leave the COMEX, when they leave the LBMA. These are one-way tickets. Just a couple of weeks ago, we had the largest one-day withdrawal of silver ever off the Shanghai Gold Exchange. This is not just a Western phenomenon. You're seeing globally a drive to accumulate gold and silver and to use the suppression, the Western suppression of price, to run cover for the massive and rampant acquisition. So yeah, I think this time it seems a little bit different to me. For the year, as of last week, there was about 13,000 silver contracts delivered that stood for delivery, or 65 million ounces off of COMEX. And that's a massive amount. we had 240 tons of gold delivered since the beginning of the year off of COMEX. And as I was looking at it a week ago, I saw that over the previous 7 days, 55 tons of gold had been delivered over the previous 7 trading sessions. This is a rising tendency. We've seen recently BlackRock purchase $175 million worth of PSLV. And this is on top of the fact of a 237.7 million ounce deficit in 2022 in mine supply versus demand, the second annual deficit. When we look on COMEX right now, there's somewhere in the neighborhood of 27 million ounces in the registered category. Only 27 million. Those are the bars that back the contracts that are out there. And, there's, 5 times as many contracts or open interest as there are bars backing the whole system. When you talk about 27 million ounces, sounds like a lot, right? Well, India imported 304 million ounces last year. You look at the total number of ounces on COMEX right now, it's about 273 or 4 million ounces, of which only 27 million ounces are up for sale. The majority of it belongs to people who have no intention of selling. Over half of it supposedly belongs to JP Morgan and the SLV, largest silver trust in the world. There is basically no silver on an industrial wholesale level, really hardly anything available for delivery when you factor in the fact that the number of contracts written against the bars for sale are exponentially higher. This is the same thing the Hunt brothers noticed in 1980. If I had to guess, I would say U.S. stocks face much more downside than upside over the next few months, as one big reason is that the banks and the proprietary firms have, have not really factored in the lagging impacts of the aggressive monetary tightening by the Fed. And not only that, when you talk about the rebalancing that these 60-40 investment firms have to reallocate their portfolios, the biggest asset managers around the world, and there's rumors that over 150 billion in equities would have to be sold by the end of June, with the money set to flow into bonds driven by rebalancing. And this is according to analysts at JP Morgan. Just came out the other day. They were talking about this rebalancing effect that they're going to have to sell a whole bunch of equities and move it into treasuries. And that would fit hand in glove with what the Fed is talking about. They're talking about issuing over $1 trillion, mostly longer term bonds issued by the Treasury